Hey, how's it going, folks? Welcome to Crypto Growth. This is your host, Shazib, signing in. Is XDC Network transforming trade finance? This is the question we're going to try and unpack in this video and come up with conclusion, with perspectives. So stay tuned and watch till the end. And for those of you who are new to the channel, we discuss about ISO20022 coins, the coins that have the potential to become ISO20022 compliant, as well as some other interesting coins. We do reviews and updates and news regarding them, so make sure to subscribe if you're into any of these coins. Anyways, so let us begin. So before we go through this article, I want you guys to understand a few simple terms that is going to make it easier for you to go through these articles, and we can share the same mind map as well. The viewers can stay in sync with me. So basically, the first question is, and the answer we get in the XDC's official website: what is trade finance? Trade finance is the financing of a purchasing transaction between a buyer, importer, and a seller, exporter. There is time in transit from the point of sale to the delivery of the goods purchased, and this is typically what trade finance covers. For example, a bank may provide a guarantee to the seller on behalf of the buyer that promises to make the seller whole should the transaction fall through due to the buyer's lack of payment. So basically, it deals with import and export and everything in between. It deals with custom documents, legal documents, compliance, and it covers a wide range of concepts. Anyways, so what are some examples of trade finance products? A letter of credit. So what is a letter of credit? It is one common trade finance product and involves a bank pledging payment on behalf of the buyer, importer to the seller, exporter. The seller's bank becomes involved. I'm going to make it simple for you guys. Basically, this is a guarantee to the seller. The banks get involved. The bank of seller, the bank of buyer. The buyer's bank gives guarantee to the seller's bank that even that this purchase is going to be guaranteed. Even if the buyer fails to pay, the bank is going to pay the seller. So basically, this is a guarantee or a safety net for the seller. Purchase order finance is basically a safety net for the buyer, in which when buyer makes an order and the vendor or the seller accepts it, he gets an order document, and that order document is a proof that the seller has to provide him those goods and services and whatever. And there are various mechanisms involved in trade finance, like supply chain finance as a technology-driven cash flow solution that automates transactions and tracks the invoices, approvals, and settlement processes. Commonly, the buyer approves the seller's invoices for financing. And short-term credit provides liquidity to both parties, liquidity in terms of capital, in terms of loan, etc., by the funders, by the banks. So there are multifaceted concept in trade finance. So basically, does XDC network facilitate trade finance? Would it transform or metamorphose trade finance or not? Let us check it out. Eyed by the governments, digital assets will reduce costs, boost liquidity, and bring new investors into global trade. This is an interesting article. Trade finance is an underappreciated asset class underpinning trillions in goods and services traded between nations every year. Blockchain technology is uniquely suited to power the financial trails of cross-border trade, and jurisdictions globally are taking notice. That includes trade, banking, and securities regulators in Europe and the UK, Southeast Asia, and the Middle East. Without trade financing, the world would literally come to a stop. Estimates are that 80% to 90% of global trade relies on it, everything from trucked freight crossing the US-Mexico border to container ships crisscrossing the Pacific. So be it trucks, be it ships, everything involves trade finance, the customs, the documentations, and everything. It's a huge industry and a market in and of itself. Given trade's importance to national economies, it is no surprise that lawmakers and regulators keep close tabs on how it is financed. Here's where things get tricky. By definition, trade finance involves at least two different countries with regulatory regimes that are unlikely to get to gel together in a simple way. After all, trade finance doesn't just concern trade authorities and customs agencies. Banks often serve as intermediaries in transactions like we discussed, and I wanted to make sure you get acquainted with some terms. And resulting loans are often securitized for a broader investment base in one or more of the nations involved, so a single trade finance transaction might theoretically be within the scope of half a dozen regulators and at least as many laws. Not surprisingly, the world of trade finance remains very manual and paper based. Recently, however, forward thinking regulators in places like Singapore, Bahrain, and UK have begun to see a role for digital asset technology. We saw a bill in UK as well, you might be acquainted with it if you're following XDC Network, to cut through trade finance's complexity. XDC Network is a layer 1 blockchain, an alternative to the Ethereum or Bitcoin networks rather than a network built on top of an existing chain, for which facilitating global trade is a core use case, alongside infrastructure financing, cross-border payments, NFTs, and decentralized applications like domain name registrars. Okay, so check this out. Traditional trade finance involves issuing bank, correspondent bank, an importer, an exporter, insurance company of importer and exporter, trade control office in one country, trade control office in another, transport company, customs, carrier, customs and documentations, transport company, and this is a complex web of a traditional mechanism of trade finance. Let us check this out. New DLT, distributed ledger technology, trade finance. This is a distributed ledger which is in the midst of it. In this case, this is XDC Network, the distributed ledger, which has made life easy for the correspondent bank, the issuing bank, the exporter, the importer, the insurance company of both countries, transport companies of both, trade control office, customs, carrier, and whatnot. So this is what XDC is tapping into, $1 trillion industry, and facilitating it, transforming it, it is metamorphosing it, if that's the right term. Basically, it is changing it. Let us make it simple. Blockchain-based distributed ledger technology would cut through complexity and allow trade finance to move more efficiently and with less cost by eliminating bottlenecks in the traditional process. Regulatory advances. Kesterman has more than 2 decades experience as an executive at the Belgium-based global payment network SWIFT. He joined XDC to manage market development and strategy. Anyways, he says without laws that allow for digitization, the shift to digital assets simply will not happen. So XDC is lucky that laws are being implemented and being allowed for digitization. We're going to touch that as well. In some ways, his work is benefiting from powerful tailwinds. Okay, so trade finance and the role of blockchain. To back up, however, what is trade finance and why has it emerged as a leading use case for blockchain technology? While trade finance covers a whole class of instruments like we discussed, one way to think of trade finance is as a cash bridge, that is an upfront payment or a backed guarantee, reducing the uncertainty and mistrust that can hold up international trade, because banks and financial institutions getting involved to give that certainty. In exchange, the provider of the financing receives fees or interest payments. It has a low risk profile traditionally. It has attracted a lot of institutional investors as well. Appetite for capital. Insurance companies, pension funds, corporates with large balance sheets, and other financial system players can put a large amount of money into trade finance and expect to see steady, predictable returns. So there are an individual might import an iPhone 15, but there are huge players there involved who invest millions of dollars basically. So there has to be a guarantee that the buyer is going to purchase that goods. So this is a rather complex mechanism, the traditional mechanism, which blockchain is going to solve. Trade finance origination, trade distribution market, anyways, closing the trade finance gap. While origination and distribution cut across all trade finance, there are different flavors of trade finance. As mentioned, trade finance is really an umbrella term for many different types of instruments and transactions. let us check out what XDC network is going to solve. Yes, this is a problem. Asian Development Bank estimates that there is a $1.7 trillion gap in trade finance, which disproportionately affects small and medium-sized businesses. Again, here's where the XDC's blockchain can play a role by tokenizing these loans on chain and making them available as easily purchasable digital assets. There's potential to add new liquidity to the market and bring in more investors as active participants in trade finance investing. Trade organizations like the Trade Finance Distribution or TFD initiative, which are working to bring more institutional investors into trade finance, are supportive of these efforts. This is basically a consortium of different banks and financial institutions such as Standard Chartered, Standards Bank, Santander, asset management company, and big giants of trade finance. Why XDC? XDC was created by Xinfin, a fintech organization with the vision for a decentralized global blockchain network that facilitates cross-border transactions and trade. There are many current and developing use cases on XDC. So XDC is a flexible protocol suited to a wide array of use cases. Impel, a fintech company that has built layer 2 solutions on the XDC network, including a financial messaging API that meets the ISO20022 standard, but adds optional instant settlement capability by integrating digital assets like Fluent Finance's US plus stablecoin. Impel also offers a bridge from the XDC network's decentralized blockchain to R3's private Coda distributed ledger technology platform. With these solutions, linking financial messaging, XDC is in the midst of it, linking financial messaging, instant settlement, a next generation stable coin, a private DLT network, and useful interoperability. Entities can now settle contracts and agreements in seconds using digital assets. It is interoperable across many chains rather than the traditional banking systems that take much longer to process payments. There are a number of rapidly developing NFT marketplaces on the XDC network and collections of tokenized real-world assets. Certain projects are even tokenizing commodities such as gold, like Comtech Gold, which is built on the XDC network. You guys can check that out. Also built on the XDC network are a number of layer 2 initiatives working to provide decentralized storage solutions like Storex, data oracles, a way of connecting blockchains with real world data and APIs. Plugin, they're talking about plugin, PLI, along with other technology designed to support payment infrastructure. XDC Network is a member of ITFA's Digital Negotiable Instruments (DNI) initiative, which is bringing trade finance instruments like promissory notes and bills of exchange to the digital space. Basically, everything that was done traditionally on paper is being digitized on the basis of English common law. In addition to tracking electronic originals, the use of XDC network can be extended to settle those instruments on chain using stable coins such as US Plus. ITFA is the International Trade and Forfeiting Association. Stable coins come into existence as well because you need a digital US dollar equivalent to settle these different transactions. DNI initiative membership, and XDC network joined DNI initiative in November 2001. So these are the institutions that XDC has joined. Will a new digital assets hub emerge? The Middle East is emerging as a new hub for trade finance innovation. Abu Dhabi, Dubai, they really want to see the digital asset space as a new industry. We can see there are developments happening in UAE. Singapore, alongside Singapore and Europe's increasing embrace of digital assets, and the pioneering work of Liechtenstein, the UK is critical. So yes, countries and regulators are moving towards a digital age. We can check this, skim out this article as well. Understanding the trade finance use case, we saw that XDC networks, advantages of XDC network based trade finance. Blockchain offers many possibilities to improve global trade. The massive trade industry will gain from blockchain over time through such benefits as operational efficiencies created by digitized bills of lading, supply chain automation, risk management solutions, new capital markets, and improved access for SMEs. So basically, everything related with trade finance from the time a product or goods leave a state or a place to the other. Everything in the middle of it, XDC Network aims to revolutionize and transform everything and make it seamless and smooth. As banks have well-established lending patterns with their clients, there are capital needs that go unmet in the trade finance sector. The gap represents the difference between the two, and it ballooned to US dollar 1.7 trillion in 2022. SMEs are getting affected according to this articles. Those most affected by the gap are SMEs and micro businesses, particularly those in developing countries. Banks rejected more than 40% of trade finance applications from SMEs. Women-owned businesses faced additional challenges as well. You can see the gap. It was $1.5 trillion towards $1.7 trillion trade finance gap in 2022. Several factors contribute to these rejections. So basically, these are these gaps and the problems that the trade finance industry or the market is facing. XDC aims to solve that. Traders generally abandon transactions if rejected for trade finance funding, and the WTO is working to address the problem of trade finance shortages. Speaking of WTO, it has acknowledged XDC Network as well. We're going to check this out, so stay tuned. And if you've liked this video up till now, please make sure to subscribe and like this video and subscribe the channel as well. The XDC network has unique affiliations with the following global trade organizations. This legitimizes XDC network basically. DNI initiative membership, like I mentioned before. Trade Finance Distribution Initiative, TFDI, a consortium of the world's leading banks and non-bank financial institutions established by the ITFA for the purpose of liquefying trade. Yes. So basically, XDC trade finance in a nutshell: 80% growth, trade volumes represented by trade finance, low risk, $10 plus trillion trade volumes represented by trade finance. So yes, there is another article in which ICC, WTO, Citigroup, and Trade Finance Global recognize XDC Network's potential in trade finance. So like we mentioned that XDC is transforming trade finance, these institutions have acknowledged that. XDC Network Singapore CEO predicts global blockchain adoption due to the legal acceptance of digital trade documents, which is happening in real time. The XDC Network team says it is set to bridge the $19 trillion trade finance asset class through tokenization. Imagine the current market cap of XDC and the market it is tapping into. It's going to be huge, I guess. Do your own due diligence, but XDC Network is going to be huge, in my opinion. Trade Tech partnered with Xinfin, XDC Network to launch the first regulated token, Trader. Trade Tech is also partnered with XDC. It has its own platform, and XDC is providing services to it. By 2030 and beyond, we will likely see greater adoption, with interoperability taking the digitized flows to higher percentages. Wider adoption will require simpler applications, low or no costs to use the basic functionalities, and new liquidity providers to support the trades. And the XDC is tokenizing the documents as well. It is the documentations are becoming digital as well, which we are going to see. So you can see that these institutions are backing up XDC network. XDC is providing liquidity for trade finance. Here is a mention of Ripple. Remittances companies can use the liquidity of XRP. You check this out. This is an interesting info. XRP built its liquidity from USD to like 50,000 per day to approximately USD 2 billion per day. So XDC aims to do that for trade finance. Basically, the liquidity is required. Liquidity among various pairs that are shared with the XDC. XDC networks, stablecoins, and XDC's network itself to provide liquid asset against multiple fiat currencies across different jurisdictions. Liquidity against fiat currencies enables instant settlement and mitigates counterparty risk. So obviously you need to have liquidity pairings to accommodate trade finance and do instant settlements. The king of settlements is XRP, which we have discussed is the world's bridge currency, apparently or non-apparently, according to some. XDC was the second most liquid digital asset against Indonesian FX markets for IDR. XDC was the most liquid asset on IDEX. So yes, XDC is building its liquidity against USD, GBP, Great British Pound, GPY, AED. So these are the biggest traders around the world. They're involved in trade finance. So providing liquidity to them is going to be huge. Uh, XDC partners with Singapore's IMDA, launches trade network to finance, MLETR. If you guys do not know about MLETR, this is what I need to show you guys. MLETR is basically model law on electronic trade records, compliant digital trade documents. It is a standard which has been made by United Nations, compliance to which allows the flow of electronic documents from one party to another. So basically, this legitimizes electronic documents to according to UN. In simple terms, when traditionally and conventionally, we used to send papers to from one party to another. Now, since 2000, this was basically accepted in 2017. Since that time, electronic document is also considered as a guarantee, as a proof, and a legal document as well. So XDC is working with Singapore's trade trust called Infocom Media Development Authority, and it is their partnership is in line with this document, the MLETR model of United Nations. So you guys can see how much progress XDC network is making. As far as the question was concerned, is XDC network transforming trade finance? The answer is an absolute yes. XDC is totally transforming and changing trade finance for the better. It is making it much more cost efficient, much more compliant, much more regulatory. It is connecting the entire the industries with one another. It is connecting the dots from exporter to importer, the banks, the lenders, the financial institutions, the services, the freight services, and everything in between, the custom documents, the tokenization of documents, whatever trade finance deals with, XDC is transforming it for the better. So I guess you guys enjoyed this video. If you did, make sure to like, share, and subscribe. And if you want to watch more videos like this, and you're interested in any of these coins, basically mostly the utility coins, then make sure to hit the subscribe button. Like I always say, until next time, stay tuned and stay blessed.